Hi everybody, and welcome to our Portfolio Insight video where we take a closer look at some of the companies that we invest in within our portfolio to explain a little bit more about our investment discipline and how ideas become investment decisions within the fund. So today I have Daniel Robichaud, who is portfolio manager of the U.S. Equity Fund and International Equity Fund. So Daniel, can you just walk us through a couple of examples of companies that we've invested in the past and why we find them so attractive?
Yeah, so actually this quarter was quite unusual for us, let's say in the International Equity Fund. To put in context, our average holding period right now is between 6 to 7 years. So we always say that we invest for the long terms, want to be a long-term holders of those businesses. We believe that gives us an information edge over our peers that sometimes just will be flipping through different holdings. But this quarter, a few new names in the fund, so it gives us plenty to talk about. One example of a new company that entered the fund this quarter is a pharmaceutical based in Italy, which is called Recordati. And what's special about this company is instead of investing billions in research and development for coming out with a new successful drug, what they have done is invest in a specialized distribution network. So they built a sales force that specializes on different drugs, and really their business is licensing late stage drugs or drugs that are already commercialized, let's say, in one specific countries, but for them to use it in their distribution, which is mostly in Europe, but now expanding in countries like Russia and even in the United States. What we believe is the reason they're having success is often those drugs are so specialized that it doesn't make sense for those pharmaceuticals to invest and build a full sales network in all countries to deal with all different regulatory systems. So it makes a lot more sense for them just to partner and get the cash up front, get some royalty on the drugs, and they'll just make a better return through partnering with this company. So overall, we just find it's a more attractive way of participating in the pharma industry. You're not taking the risk of development, and we think that the advantage they have is just gonna get bigger and bigger as they scale because their sales force keeps expanding, and it's just gonna be a better and better partner for the other pharmaceutical. That's one of the new holding. The other one that I find interesting is a manufacturer of semiconductors, so completely different industry.
Right.
And it's called Taiwan Semiconductor. They're a contract manufacturer, which is always often called foundries. And basically, the designers of chips, so think of NVIDIA, Apple, or AMD, instead of manufacturing their own chips, investing billions in building those facilities, it makes just more sense for them to outsource this to those foundries like TSMC. What we found is over time, the barrier to entry has just got bigger and bigger because the investments they make, so we want those chips to be always smaller, more efficient, more consume less power, more fast, and we see it throughout the phones every year. They come and they're faster, the battery lasts longer. So those foundries have invested billions every year just to get better on R&D, and it can cost more than 10 billions just to build one of those manufacturing plant.
Wow.
So really what we see is just increasing barrier to entry, and we're participating in the tailwinds of the industry. So we see a lot more demand for semiconductors from just artificial intelligence, IoT, all those buzzwords, but just creating more demand over long term. We see that way of participating in the industry, higher barrier to entry, and versus the designer, and with good tailwinds for the long term.
Okay, so, well, thank you very much for that. I think that was some great insights on how thinking outside the box can really add value to portfolios such as ours. So thank you very much for watching, and we'll catch you next time.